traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's get our analysis. And you notice how the equity markets are bouncing pretty aggressively right now. I just need to reference the Dow futures are now up 28 points. You notice how they just shook the trees. I mean, we were talking about that with the DAX. I mean, look at the DAX here. All they did is they just shook you out. Not you. I'm just saying, generally speaking, they just tried to shake the trees and get market participants short, or get longs out of the market. Just kind of shaking them off before they make their run, and that's what happened here. I don't know if we're going to blast a new highs just yet, but that's when you're looking at price action. That's the gut instinct that I have, is that they're just trying to. It's like, okay, I'm going to give you one more example. How many of you, and I'm going to ask you this question, how many of you were short the US dollar Canadian? How many of you were short the US dollar Canadian but got out yesterday? And I'm not saying that's the wrong trade, because many of you got out, and you got out at even better prices than we're at right now. Okay, so it doesn't matter if you're still in or not, but think about a lot of you guys, and I'm going to rattle off some names here, not full names, but Christos, Edge, Dan's still in. I'm sorry, Nigel, Lyle, Alan S, Joe got out yesterday, Eric was in and out, Rick got out. Alan F said, I already fessed up. You did. And Hamid got out at 70%. DK did. Greg did. Michael W. already out. Ron G got out yesterday. Okay, some of you guys are still in. Like Ricardo, still half size. Okay, think about that. What had happened here? All right, and I'm just using this as an example. So now the dollar Canadian, we had this bearish engulfing pattern. We dropped. We hit brief new lows. We hit brief new lows yesterday. We bounced up, freaked a lot of people out. A lot of people said, you know what? Screw it. I'm getting out. I'm taking my 200 pips, my 100 pips, my 300 pips. I'm taking my 300 pips. I'm going home. I'm done. I'm done with you. I'm done. Think about, and now you're a little hesitant, because now you're like, well, I had such a great entry up here at 144 or 146 or 145. I had such a great entry up here. I don't really want to short right now. I'd probably short on a move back to 142 or 143, but I'm not going to get short here. And think about how many less people are in the market now. Now you have less traders short the dollar Canadian, and think about that's what frees up the potential. And I'm not saying the dollar Canadian is going to break down. I'm hoping it will, but on the next move lower, should we move lower, there's less people on the train. There's less people on the boat. Okay, the boat was probably getting a little lopsided. And shook a few of you had ended up falling off port side. You know what I mean? The boat was a little tipsy, and a couple of you fell off and went overboard. But that's okay. You made good money. It's not a big deal. But now, if we're going to make this next leg lower, there's less people involved, and so that has allowed the market to free up and make that next move. It's kind of like the same thing with equity markets. You got the E-mini, well, we can do the DAX too, but you got the E-mini futures. If the E-mini futures are trying to make their way higher, and they're trying to move higher, they just stopped out a bunch of people down here, just stopped everybody out, and it's a total normal move before you see a next surge higher. All right, it totally is. And like I said, I'm still in my Canadian pairs. Should I be taking profits? I probably should take a little bit of profits, but I'm still, I'm overly. I still overall feel that the dollar Canadian's moving down towards 137, 138. So, I'm still in it. But anyway, just trying to give you guys some idea of what I'm thinking in these moves right now. Okay, all right. Let's continue on to analysis to the euro dollar. Okay, so I hope that all made sense. Let's see here. And Stephen S said, yeah, and there's plenty of people still long the dollar Canadian. Oh yeah, there's plenty of people long the dollar Canadian. Excuse me one second. Okay. All right, so let's go to the euro. Now, we talked about the euro yesterday. I drew this last night. I was actually writing down support for the euro dollar last night, and I just drew that out. But here we are yesterday, and here we are now. It's like, as you can see, there's not a lot of change here. But what I'm hoping for, again, hope, fingers crossed, I'm looking for a move up towards 109.80. And you know, I kind of agree with Paul. It's not like I ever, don't agree with Paul, but there's, certain things I really do agree with him. I agree. If the euro dollar can hold up at these levels, we might drift up here going into the end of the week and give us an opportunity, maybe even towards the end of the week, being able to short the euro dollar up here at the 109.80 level. This is again from a risk management standpoint. In my opinion, this is the best place to enter a short euro dollar. Does that guarantee that if you short the euro dollar at 109.80, does that guarantee you're going to make money? No. There are no guarantees. But I will tell you this. If I short the euro at 110 and I keep my stops, like at 111, I'm risking 100 pips to make, well, I don't know, maybe back down to 106. So think about this. I'm just, and I'm willing to take that. I'm willing to take that trade anytime, especially under the current circumstances where you got the Fed that seems like they're going to continue to raise rates, and you got the ECB that, come March, they look like they're going to even quite possibly, enlarge their balance sheet. So, we get up to 110. Your stop is at 111. Your reward is somewhere down here, and you're trading right here. Look at the risk reward on that trade, right? Look at that. Look at the risk reward. You risk this to make that. I would do that any trade every day of the week, because I know as long as it matches up fundamentally, because I know that I'll probably make money at least half the time, if not more, because if I got the fundamental backdrop matching, but I got a great risk reward. Yeah, is there a chance I could lose money? Sure, things could change. Maybe the ECB puckers up and they decide that they don't want to do, more quantitative easing. Maybe the Fed, maybe the Fed caves into pressure and decides that they want to keep rates on hold for all of 2016. Sure, all that could happen. That's the risk. But the risk versus reward at that point is great. And that's why I personally am willing to take a shot at it there. Now, the question is, are we going to make it? That's the question. That's the question that, that I have to ask myself, and that's the question that you have to ask yourself is, are we going to make our way up there? I know some of you are like, screw that, Blake. I'm going to start shorting right now, and then if we get up there, I'm going to short some more. Sure, if that's how you want to trade it, that's how you want to trade it. I personally, I'm going to be waiting. I'd be waiting, and but I'm waiting patiently. A lot of times I patiently wait, and nothing happens. I wait and I wait and I wait and never gets there. But sometimes all the moons line up and we get there. So there's the euro dollar. There's your range. Okay, that's resistance. Support obviously is at 107.70. Is that support for today? I'll draw what I drew last night for the. I drew this trend line last night. And because you can read my FX wrap. You don't have to read the whole thing. You can just read this one line last night. So the euro dollar struggled above the 109 level, and sellers should be strong from 109.50 to 109.80 tonight. Support is strong at 108.50. Where did I come up with that number? You know, it's really just this upsloping trend line, and 108.50 intersected that last night, you know, somewhere down here. So again, you know, if we make it down to 108.50, it's probably going to be some pretty decent support. We break through that, that's going to open up the door. We break through that, that's going to open up the door to actually get down here. So I think today 1.0850 is going to be support for today. You know, and I can't deny that the euro is drifting higher. It's trying to drift higher. It's trying. It's attempting. I'm not saying it's going to be successful, but it's sure as hell is trying. All right. Let's go take a look at the cable. So, because I like self-mutilation and torture to a certain extent, I actually bought the cable this morning. Just a third size position, a few pips from where we're at right now. But the cable raced higher on, here, let's get rid of this. This is from yesterday. So the cable raced higher on a GDP that was in line. Okay. Now what we did this morning is we stopped at a 618 retracement of today's move. You can see here, low, high, 618, boom. I start nibbling it when we get to the 50% retracement, but we're here and we held the 618. I would think that you have probably cable buyers or cable shorts that are getting a little nervous right now. I'm assuming they're getting a little nervous because this, you notice that all these charts look the same. I know I've said that for the last couple of days, but you notice all the inverted head and shoulder patterns. Do you notice all the all the regular head and shoulder patterns everywhere? They're everywhere, everywhere. Okay. So today, any dip to 142.60 is going to be very well supported. Resistance 143.60. I think you got to buy it on dips while this is forming. 142.60, 143.60, and that is major resistance. And remember, we went from a bearish trend to a range. Okay. Let's go to the dollar Swiss. Now, if you weren't here when Paul Franco was here earlier, if you weren't listening in when we crossed over, when he was on and I was on, I was telling him, and he was reading some stuff about the Swiss National Bank, and here, let me get rid of this really quick. We don't need that for right now. Let's just extend this out. Okay, so he was saying he was reading a Reuters story about, you know, the Euro Swiss is as high its levels since, you know, when Swiss National Bank pulled the floor of the Euro Swiss, yada yada yada. And he was short the euro dollar, and I'm like, you know, if you really think the euro dollar is going to roll over right now, if you think it's going to roll over right at this point in time, personally, I think the dollar Swiss might even be a better long. If you guys think that stocks are going higher, okay, or the euro dollar is moving lower, this might be a good long right here. And I'm not long the dollar Swiss right now. I'm not. I was considering it. I'm still considering it, but I haven't done anything about it. So I'm not, you know, I'm not trading it at the moment. But look at what your risk is. Your risk is below here, you know, so 101.20 basically is where your risk is. 101.15. We could actually even write down what are the lows. 101.17, 101. Yeah, it's like 101. It's 101.20, but I can write down 101.15. Okay, that's support right now. I know it's the same level we wrote down yesterday, or we wrote down 101.20, 1.0210. But think about this. If you believe that stocks are going up, okay, if you believe stocks are going up, then the dollar yen should rally. The dollar Swiss will probably rally as a result. Okay, commodity currencies will be stronger. You know, the Aussie dollar will go up, the Kiwi dollar will go up, Canadian currency will continue to strengthen. You know, that type of thing. And if you think the euro dollar, because when risk appetite improves, the euro dollar, starts to come down, you probably will get a bounce here in the dollar Swiss. So if you think that the equity markets are going to continue to squeeze higher here, maybe you get long some dollar Swiss, and you can keep your stops relatively close. Again, I have not taken this trade. It's something I was thinking about this morning. I just haven't done it yet. My hesitation right now is not really buying the dollar Swiss. It's just I still would like to see the euro dollar get to 109.80 before making a move here. Because if the euro dollar gets to 109.80, that means the dollar Swiss will probably get down here. It'll probably do this and then bounce. Or maybe the euro dollar is done and it never gets to where I thought, and we bounce anyway. So regardless, I want to buy it, but I'd rather buy it down here than up here. But like I said, you may have a different attitude than me. You might say, Blake, the euro is done. It's not going up. The euro dollar is going back down to 107, like tomorrow. If that's your take and that's your analysis and that's what you think, then you probably want to be long the dollar Swiss right now. Okay, but I still think that the euro dollar has a shot of getting to 109.80. That's why I'm trying to be patient and just wait for the dip down to dollar Swiss. But like I said, if the dollar turns higher, 102.10 I think is doable. Again, I'm not, and by the way, I've got Canadian Swiss longs, I've got Aussie Swiss longs, so I've got Swiss exposure to the short side already. Okay, all right, let's Georg said something that's, I'm going to stop really quick, and he says this: some of the inverted head and shoulder patterns have to fail, though. No, they don't. Do you know what makes? Tell me what makes a powerful move in the markets. Do you know what makes a powerful move? Tell me. What makes a powerful move in the market? Because I need to write all this down. When everyone does the same, how about let me do, and that's a couple answers of you guys saying that. How about let me say that a little differently. How about when everything is moving in unison? When everything moves in unison. So, give me a list of inverted head and shoulder patterns, just right off the top of your head. I'm going to name a couple, okay? We have crude, right? We have the E-minis. We have DAX, okay? I'm writing these down. We have Aussie dollar. That would be, these are all inverted. Anything else that I can think of? Yeah, almost everything. Tom says almost anything, but yeah, I'm just trying to think here. Okay, Aussie dollar, dollar yen isn't. You probably have the Aussie yen, I think. The pound, yeah, the pound dollar, same, right? Right, yeah, pound. Okay. GBP, USD. What is the normal head and shoulder? You have US dollar, Mexican peso, right? Which is already starting to work itself out. What else? Oh, pound yen on the inverted head and shoulder patterns. Okay, pound yen. What else? Somebody said Euro Aussie. Euro Aussie. Yeah, hell yeah. Euro Aussie. Dollar Canadian is not a head and shoulder pattern. The dollar Canadian is just a flag pattern. But you guys know a head and shoulder pattern in the Euro Aussie is inverted of the S&P, right? So okay, I just have a few listed off just as we're talking, just off the top of our head. So, you know what makes a really strong move? Get them all to move at the same time. You know, I don't think the dollar yen is one, but get them all to move at the same time. If all of those that I just listed off, if all of those move at the same time, crude, E-mini, DAX, Aussie, pound yen, then you have head and shoulder patterns of the peso, the euro, Aussie. If all that moves at the same time, guess what you're going to get? A really, really, really strong move in the market. You're going to get a short squeeze. It's going to be a short squeeze because equity, everybody that's short equities, everybody's short crude, they're going to get squeezed. Okay. Anyway, I'm just rattling that off just because, um, you know, Garrick said, well, some of them have to fail. They don't. They may not make. I would say that some of the inverted head and shoulder patterns and some of the head and shoulder patterns won't reach their target potential. That I could agree on. Okay. All right. So here's the dollar yen. Knew one of two things was going to happen. Now, dollar yen. How important is this? Let's get rid of this because we stopped at the 38% retracement. You guys see that? Stopped at 38% retracement. So why is that important? Well, the reason why that's important is because that's a pennant. You guys know what a pennant looks like, right? It's a pennant, right? Bullish pennant flag. That target's actually higher than I thought. 120.70, which comes right into our sell zone, right? Oh shoot, I didn't want to do that. Damn it. Damn it, man. You're going to just piss me off, aren't you? Okay, fine. Fine. Okay, there we go. All right, so there we go. So dollar yen, we stopped at a 38% retracement. We're stopping again at a 38% retracement. How important is this resistance? And I'll tell you what, guys, if we break 119, I would not be short. Risk appetite. Okay? Damn it, man. You're killing me. All right, so here's the range. Support 118.50. All right, I'm going to take a little bit of a break. When I come back, we will continue on with the Canadian, the Kiwi, the Aussie. I spent a lot of time today talking about other things, like all the inverted head and shoulder patterns, talking about some price action earlier. I hope this is all good for you guys. I hope this analysis is fun and educational all at the same time. I'll be back in a few moments. When I come back, we will continue on. Thanks, everybody, for being here. Happy Thursday to you. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I would like to welcome you all back, and we're going to continue on with our analysis. I think we have German CPI just coming out, 0.8%, which is in line with estimates, so nothing really exciting. I mean, the euro's just kind of sitting there, so blah, 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 blah. All right, futures still, holding on to their gains. Euro's coming down just a hair. Futures holding on to their gains. Crude is, crude's about 40 cents from really taking out some downside stops, or some short stops. So just keep in mind, crude is trying to make its way higher. Don't get caught short crude. If you are, be very careful. Because they're inching closer and closer to that $33 level. And man, if that breaks, it's going to be, we'll probably, in my opinion, if we break crude, if crude breaks, sorry, let me rephrase that. So if crude breaks, we'll probably see 34 bucks pretty quick. I would think that's where the stops are gonna, we break through here, it's gonna be a quick, right up to 34. I would think that it just triggers a bunch of stops going higher. All right. So anyway, okay, going back to the analysis, let's go over to the dollar Canadian. Speaking of crude, okay, so here's the Canadian. We were talking about it a little bit earlier. The Canadian needed some consolidation here. I mean, like I said, it had to shake the trees. If this flag pattern is going to play out and take us down to 137, 138, somewhere down here, we needed to shed some of the weight. And yes, if you got out of your short position, I consider you weight. It's not. I'm not using it in a bad way, and I'm not trying to say, oh, you're just dead weight or anything like that. But what I'm trying to say is that we had to weed off some of the short positions because there's probably pretty aggressive coming through here anyway. So now that there's less people involved on the short side, now we're probably going to make our way lower, especially if crude oil breaks out. So, obviously if crude oil breaks out, I would think that not only the 40.20 is in jeopardy, but the 140 level. I'm not even going to write down 40.20 or 40.30, whatever the lows were yesterday. I'm writing down 140 because ultimately that is where the rubber meets the road. And if the Canadian breaks through 140, it is going to fall pretty aggressively. Okay, resistance right now is 141.50. And we are still on a bullish trend, but I think if we go below 140, it's going to put us in a range environment for a while. Okay? Look at crude oil. Look at crude. Here, let me just do this really quick. I'll put up crude. Well, euro's coming under some pressure. Whoa, 91. Here, let me put this on top. I don't know what it's doing down there. Okay, there we go. We're at 32.90. Look at it. Hey! Don't get caught on the short side of crude. If it pops, it's going to be poppy, like popcorn poppy. Okay. Anyway, so we did the Canadian. Let's go over to the Kiwi. So the Kiwi, obviously the RBNZ, the RBNZ really cited weak inflation data. Now, trade balance came in better than expected, but I'll tell you the thing that's going to weigh most, on the Kiwi dollar is, like I said, I think it's going to be priced in to, just China and how China, just how slow China's growth is really going to eventually weigh on prices in the Kiwi. Now, that doesn't mean that the Kiwi dollar cannot rally, because it can. I believe it can, because the dollar may sell off as a whole against commodity currencies, especially if stocks continue to rally. But I will tell you this, that I would rather play the Kiwi on the short side than the long side. Obviously I'm short the Kiwi through long the pound New Zealand. I'm short the New Zealand Canadian. I'm long the Aussie New Zealand. So, I'm playing the Kiwi on the short side that way. But right now you can see even the Kiwi just, we retested this trend line. That's a struggle, So any rally back up here, you're probably going to find some sellers. And that's 64. I give it all the way up to 65 cents. Here, let me remove this. So 65 cents support right now is right there. 64.10 resistance, right here, all through here. So I'm going to put 65 cents, and support is 64.10. and we're in a range. Okay. Aussie dollar. Now the Aussie dollar, we have, which worked out really well yesterday. So we had, I don't know if any of you guys were trading the Aussie. I'm long Aussie Swiss and Aussie New Zealand, but I'm not trading the Aussie dollar long. I traded this. Let me be the first one to tell you, I did not trade the Aussie dollar well. I did not. I bought it like right here, somewhere here, and I sold it somewhere here. So as much as you can say, oh Blake, well you called it the double bottom neckline. We hit the resistance perfectly. Yeah, I can say all that, but I didn't play it. I didn't trade it well. So there's a big difference between, and there's a big difference. I hope you understand this. There's a big difference between how there's people that can analyze, but then there's how you trade. Your analysis is completely different. Do you guys know the gentleman by the name of Jamie Coleman? Do you know who Jamie Coleman is? Anybody? Yeah, I've known him for years. I've known him for like, I don't know, 7 or 8 years. He started Forex Live. He's the one that started Forex Live. Before that, he was at Forex Briefs, and before that, he was at Reuters. And I've communicated with him ever since he went off on his own from Reuters to FX Briefs. I'm talking 2005, 2006 maybe. So you guys know. He in my opinion, he's probably one of the sharpest guys out there. He really is. Okay. Market-wise, he can dissect the market and central bank activity like it's nobody's business. And he's the first one to tell you he can't trade himself out of a paper bag. I mean, but he's honest. He's like, I can't trade, but I'm really good at analysis. But he is. He was great at analysis. And I don't know. I mean, I don't know how he traded. He would always say that. So there's a difference between when you do analysis and how you trade your analysis. Like sometimes I felt that the Aussie dollar were going to have a double bottom hit here and stop. I don't know why I didn't trade it that way. I bought it here, sold it there, and I made 20 pips. It's like, what a doofus. I knew that was gonna happen. I just, I didn't trade it too well. Obviously there's other circumstances that are happening at the time, whether it's risk aversion, whether it's, a dip in gold, or, a rally in silver, whatever it is that can influence your decision making at the time for that particular instrument. But there's a difference between people who can do analysis and people who can trade, and then there's people who can trade and do analysis. All right, and there's a big difference in that because I know a lot of people that really they just do analysis and that's it, and that's really what they're good at. Okay, but there's a difference between the two. All right, now. And what I'm telling you is I did perfect analysis here, poor execution, So I'm trying to make up for my blunders on the US dollar Canadian right now. but you can see there's a big inverted head and shoulder pattern with the Aussie, which suggests to me that if we break above the 70-90, whatever the high is here, this is part of the inverted head and shoulder pattern that's on its way to break out. Okay. So yes, Jamie Coleman did FX Briefs before Forex Live. That is correct. And he did FX Briefs, Forex Live, went back to FX Briefs when he spun off from Forex Live, and then he writes for like somebody else now. Really great guy though. I really, it's one of those people. I tell him whenever I get an opportunity. I'm like, man, I miss your stuff, because he always had such great. He could dissect a central bank and what they were doing and what their motives were better than anybody out there. And really, those types of insights are very hard to come by. I try my best, but I think I fall miserably short compared to the likes of him. Okay, key resistance is 7090. So at 7090, that's where we have our, that's going to be the inverted head and shoulder pattern. So we got the double bottom, but you take a bigger look at this, and you have Andy says, have you asked Jamie to come on the Morning Edge? No, because they've always been viewed as a competitor, right, to our brokerage firm, because they were sponsored by FXDD at the time, and so because of that, I could never really bring him on, and then when I could, he was already off doing something else. But anyway, and I don't know how much in the game he is nowadays. I think he's kind of doing other things, not so much central bank related now. Anyway, okay, enough about that. So support for the Aussie. Support for the Aussie is 70 right now, because that's the low. That's the spike low here. If we break below 70, I guess I can get rid of this now, because this has been there, done that. We don't have to look at that anymore, right? So if we break below 70, that'll rattle the cages of anybody who's long. If you're long, you're going to go, oh, I don't want to really be long anymore. So below 70 cents. And we are in a range environment. But I'll tell you, we start squeezing here. We'll still be in a range, but this inverted head and shoulder pattern, this thing will lead us right back up to. Let me remove that. This inverted head and shoulder pattern will lead us right back up to here, guys. We're coming right back to here. If we break, we're going right back up to there. All right. Dollar index. I got to continue on. Got sidetracked a lot today. Okay, here's the dollar index. Wow, once again, another day, another important test of this trend line, huh? Not only is it important, we're sitting on it right now. Let me remove this fib really quick. Well, actually, you know what? Forget that. Let's hold for a second, because this is, just so you know, this is the 38% retracement that we're sitting on right now. Okay, now I'm going to get rid of it now, but you can see 38% retracement. All right. So that means to us that 98.70, I know it's just below where we're at, but this is really important support today. Okay. 90.70. We break through that, the euro dollar is going to 110 or 109.80 or whatever. Resistance 99. Look how tight we are winding. 99.15. Okay, so 98.70. 99.15. 98.70. Sorry. 99.15. Tight range. Let's go over to the peso. Here's the peso. And then yes, that's from Dude, Where's My Car? And then here's the head and shoulder pattern. And and that is the bearish wedge, is trine, bearish wedge, head and shoulder pattern, whatever you want to call it. Notice here, let's take this. That high is 1832. Our low today is 1832. So I would think that 1832 is massive support. US dollar, Mexican peso, 18.32, massive support, okay? Resistance, 1853. I'm still short. My cost average was at 62, but I added slightly to it yesterday, so my cost average is 1859 now. It is still very bullish. Keep in mind, I am trading counter trend, and I understand that. Crude? Oh, so close. They just don't want to push it. Like, you know, when you're so close to resistance or support, and it's like the market's saying, "You do it." No, you do it. No, you do it. No, you do it. You do. No, you go first. You first. No, you first. No, you. No, you. That's what it is with that crude. All right, let's take a look at the Norwegian krona. You first. No, you break out first. You pull the trigger. I ain't pulling the trigger. You pull the trigger. All right, so if crude oil breaks out, the US dollar Norwegian krona is probably going to break through this 38% retracement. Remember, this was my original target, but I've since changed my tune on my short because we're here and crude hasn't broken out. So if crude breaks out, we're going to 840. So that means that 862 is key support. Okay, and resistance now. Probably back at, well, that's holding us now, but I would think this is a this is a good, like, if you can get a spike up towards here. I'm loosely drawing this trend line, this resistance, because you can see I'm going through that. So somewhere around 871-ish will be decent resistance today. If you can get an opportunity to, if you think crude oil is going higher and you can get a chance to short it up there, that'd be great. But I just don't know. I don't know if that's going to happen. All right, and then Swedish krona. I doubt anything's happening here. There's nothing been going on with this currency pair. It's very choppy, extremely choppy. Okay, nothing going on. So here's your bias chart. It's now done. Savas asks, am I still in the Aussie New Zealand trade? Do bunnies have tails? I guess that's a bad question because, oh no, I was going to say bunny foot. Do bunnies have feet? And then, you know, then you can say, well, I have a rabbit's foot on my keychain, and then I can say, well, there's at least one rabbit that's missing a foot. Then, but to answer your question, yes, I'm still on Aussie New Zealand, and I'm targeting a lot higher than where we're currently at. So yes. I've been in it for several months. Okay, let's not several months, several weeks rather. Let's go into your questions. All right, so your first question comes from Shinten.